Good morning, students. So we are really basically going to start right at the beginning of financial accounting. We've already done the conceptual framework. So I want us to use what we have learned from our discussions of the conceptual framework to apply to the so-called ABCs of accounting. The ABCs really being the beginner's course or an entry course, if you want, for financial accounting. Now, we're just going to discuss general ledger accounts first of all before we actually start looking at the accounting equation. Because before we can look at the accounting equation itself, we must understand how general ledger accounts work. They also sometimes refer to it as T accounts. T accounts simply because if you ignore all the other lines, if you only take that top line and this center line, it looks like the capital letter T. Right, so that is what typically what a general ledger account looks like. Now, when it comes to the ABCs of accounting, ladies and gentlemen, first of all, we have to understand that accounting worldwide, now for centuries, uses a double entry system. A double entry system. What does that mean? To use a double entry system means that for every entry that you put on the debit side, and we'll talk about debits and credits soon, there's got to be an entry on the credit side as well. And the entries must add up to the same figure. So they must add up to the same amount. In other words, that entry must balance. Sometimes you may get, excuse me, slightly more complicated entries where you might have more than one debit or more than one credit, but the principle remains the same. Your total of the debits for that entry must add up to the same amount as the total of the credits of that entry. Right. So, ladies and gentlemen, here you can see on the left-hand side, and this is important for us to know. I know those of you who had accounting at school know this very well, but as we said last week and the week before, there are some students who did not have accounting at school, so we really have to go through the basics or the ABCs for their benefit. So, ladies and gents, so this is our debit side, right? So I'm just going to type the debit side. So clearly, if you look at that account, that T account or general ledger account, your left-hand side, as you look at it, your left-hand side is the debit side. And as you look at it, the right-hand side of that center line, the right-hand side is your credit side. Right? Why there are various columns there, ladies and gentlemen, we are starting with a manual system in financial accounting, not financial accounting. In your second year, when you get to accounting information systems, you are going to apply this in electronic circumstances as well. So then you are going to be using Sage 1 cloud accounting, for instance. There is someone who has a microphone on. If you can just mute your microphone, please. Let me just check. It's Tolimali, or do you want me to mute it for you? Okay, I've done that. So, ladies and gents, where were we? So we've got a debit side, we've got a credit side, and as we've said, the total of your debits for every entry must add up to the same as the total for your credits for every entry, right? That is the double entry system. Now, ladies and gentlemen, what is important for us to realize is when we look at the various elements that we've discussed. Now, you remember when we discussed the conceptual framework, we said the 5 elements that are being defined within the conceptual framework are assets, liabilities, equity, income, and expenses. So, what is the effect on those elements when we have an entry, ladies and gentlemen? So that is the next thing that we've got to go and look at. So if we have an asset, if we have an asset, so maybe I'm going to keep on typing, but I also want you to give me some answers. Those of you who had accounting at school can perhaps help us out here. If you have an asset, on which side will an asset's balance increase? Debit side or the credit side? The debit side. The debit side. There you go. You've all got that right. Perfect. Perfect. So let's now go and type that in. So assets increase on the debit side. Then at the same time, ladies and gentlemen, if there's a decrease in assets, when will an asset increase on the debit side? If it's a non-current asset, it would be, for instance, if you have acquired a motor vehicle, or you've acquired land, or you've acquired machinery. In other words, you've acquired or bought a new asset, right? Then you will capitalize it. You will debit the specific account name. It could be property, it could be motor vehicles. So you'll have a specific account name there. Right, so it increases on the debit side, but sometimes you may also sell an asset. The asset might be inventory, so you're going to sell it at regular intervals, hundreds of times a day. So on which side will your assets decrease, ladies and gentlemen? So now you don't have to type that. Obviously, it's going to be the opposite, decrease on the credit side. Okay, so there we've got it, ladies and gentlemen. If we look at that ledger account, if it's an asset, if this account is an asset, we acquire an asset, it increases the total assets. It means we have to debit this account. If we dispose of an asset, ladies and gentlemen, it means we have less assets now. So we've got to decrease the balance on this account. So therefore, we have to go and credit that account. Right, so far so good. Now let's look at liabilities. We now know what the accounting equation looks like. We've discussed that briefly last week. So it means that assets equals your liabilities plus your equity, or you can say equity equals your assets less your liabilities. Right, so now when it comes to liabilities, ladies and gentlemen, on which side of your ledger account would liabilities increase? Debit or credit side? Credit side. Thank you, Levante. Thank you, everybody. There we go. Lolita, thank you, on the credit side. So those of you that are providing the answers, obviously or probably had, thank you, Maltome, as well. So you've probably had accounting at school, right? So let us now go and type that in. So liabilities increase on the credit side. When will that happen? I think the example that came from your side, students, last week, or not last week, last Monday, when we discussed this, was a loan, a long-term loan. So if you take out a long-term loan, it means you now owe more money to that financing institution, right? So you owe them money. What does that mean? It means you have to go and increase the balance on that account. A liability account has a credit balance, so to increase that, you have to go and credit that specific account, right? If you repay the loan, ladies and gentlemen, if we look at the whole entry, if you repay the loan, you're going to credit your bank account because money flows out of the bank account, and then you are going to debit the long-term loan account or whatever liability it is, so it will decrease on the debit side. It will decrease on the debit side. Okay, so far so good. We're still with the statement of financial position. For those of you who know about the statements, I've actually posted some typical statements under this folder, but we'll get to that at a later stage, not today yet. So now when it comes to equity, ladies and gentlemen, when it comes to equity, if you can type for me again, ladies and gentlemen, when it comes to equity, on which side, debit or credit, would your equity increase? Thank you, Lolita. Exactly. Also on the credit side, right? Because we know that assets equal liabilities plus equity. So the liabilities and equity will almost work like will work similarly. Uh, Thank you, Matomi, as well. Thank you. Right. So there we go. Let us go and type that in. Sorry, I must find my my sheet because I've got many open at the moment. So equity increases on the credit side. Now we're going through this fairly slowly, but these principles are so important. I really cannot emphasize this enough, ladies and gentlemen. If you are new in accounting, new in financial accounting, and you do not understand these principles, then you're going to struggle with accounting forever. You're going to struggle with the rest of this year. You're going to struggle even more in financial accounting 2 and financial accounting 3. So that is why I'm going through this really as slowly as possible, step by step, and I want everyone to understand it. And even, ladies and gents, if there's anyone who does not understand anything that we have just mentioned, you are welcome to raise your hand and stop us, and we'll talk about it again. Just don't ask me, please, to repeat something because I am recording this session. So you can always go and listen to the recording or watch the recording. Let me just make sure. Yes, I am recording it. Thank you, Vince. Uh, why does equity increase on the credit side? Bontle, why does it increase on the credit side? Because what happens when let's look at the whole entry. Maybe that will make more sense. And thank you for the question. If, like I said, if there's anything not clear, we want you to ask the questions because it has to be clear once we're done with this lesson. Let's look at the whole entry. Let's look at the whole entry. What actually happens when your equity increases? What happens? Let us just look at the simple situation of a sole trader, that just one owner. What happens if equity increases? The owner puts some asset into the business. Does that make sense? Let me just pause there, Bonsley. Does that make sense? It could be cash, it could be a vehicle, but the fact is the owner is depositing some sort of an asset into the business. His or her own personal property now becomes available or under the control, as we say, of the business. Does that make sense? So this is what happens when equity increases. Is that okay? Perfect. Thank you. That's good. So the owner puts something into the business, which means, ladies and gentlemen, that an asset, your assets will increase. Thank you, Maltomi, you as well. So it means your assets will increase. So on which side does your assets increase? We've just typed it a little while ago. You can still see it on the screen there. Your assets, an asset, let's say it's cash, that the owner has now deposited into the business's bank account, makes that business bank account more. So it means the asset called bank has increased. And on which side does the asset increase? On the debit side. And as we've said earlier, all your entries must balance. So your total debits and your total credits must equal one another. So if your assets have now increased by the amount that the owner has deposited into the business bank account, what do you have to do with your owner's equity or your owner's capital? We'll call the account owner's capital, which is equity. What will you have to do with that account? If you've debited your assets and assets equal liabilities plus equity, and our liabilities did not change, What will happen with equity? It increases because we've debited the asset account. What do we have to do with the equity account? Debit or credit? If you can type for me, someone. Hopefully, Boncle. Boncle, what do you have to do with with the other side of that entry, the other leg, as they say, of that entry? It has to be a. If you've already got an amount that you've debited to your asset account, it now has to be a credit. Thank you, Daniel. Daniel Jr. Okay, it has to be a credit. So that is why equity also increases on the credit side. The opposite is when the owner takes money out of the business, right? If the owner, let's say, takes any asset, but let's say money, they do with a withdrawal. They are withdrawing some money out of the business account for their own personal use. It means then money flows out of your bank account, which in turn means that you have to go and credit your bank account. And then the other leg of that entry would be to debit your owner's equity. So, what does that mean? Owner's equity being an equity account, or owner's capital, if you wish, being an equity account. It means equity decreases on the debit side, right? Does that Right, ladies and gents, I don't know where you lost me. My power obviously went off, but I'm connected now again with my mobile data. I'll just have to go and share that document again. Let me just go and find it. Well, at least I said that this was going to happen before the class started, so there it has happened. I'm on my mobile data. Hopefully, the battery of my cell phone and the battery of my laptop will last. If you lose me again, it means one of the batteries have gone. Okay, then I won't be able to return. Now, I'm not sure where exactly you lost me, but where we were, what we were talking about is income now, ladies and gents. So now we are looking at income. So if we look at our general ledger account there, on which side will the income increase? That was what I was saying, but I'm not sure whether you caught that part. So on which side will your income increase, debit or credit side? Nice try, Barnsley. Anyone else wants to try? On the credit side, thank you, Matomi. Thank you, Lolita. Credit side. Okay, let's maybe just talk through this before we type it there. Let's imagine you are doing a cash sale because that is the most simple kind of transaction that you can find in any business. If you do a cash sale, right? What does that mean? It means you are receiving money. You are receiving money, and at the same time, you've made a sale. In other words, you've generated income. Does that make sense, Bontley? You've received money and you've generated income through sales. Now, if you receive money and you deposit that money into the bank account, and the bank account being an asset, what do you have to do with that bank account? Remember, the bank account now is going to increase on which side? It's an asset, it increases on the debit side. So now for your entry to be able to balance, what must you do with your sales account? It means you have to credit it, right? You have to credit it. So income will increase on the credit side. Right? Income increases on the credit side. Uh-oh. Now, unfortunately, as you can see, because I'm using mobile data, it doesn't auto save, but I'll save it when my power comes on, and I'm connected to the Wi-Fi again. Then I'll save this document so that I can make it available. But at this stage, unfortunately, it does not auto save. But yeah, I must. Hopefully, my battery doesn't run out. Okay, so does that make sense now? Why income increases on the credit side? Because normally, when you generate income, such as sales, you get some sort of an asset in return. If it's a cash sale, the asset that you get in return is cash. If it's a credit sale, the asset that you get in exchange for that sale is your accounts receivable balance or your debtors balance. In other words, the fact that the debtor, the customer owes you the money. Now, income doesn't often decrease, but it is possible. For instance, if you've made a sale and the customer isn't happy and the customer returns the goods to you, it might be possible that you have to go and cancel that sale. So then, income, if you have to decrease your income, for instance, like I mentioned, you are canceling the sale, then income will decrease on the debit side. Hope all of that makes sense so far, ladies and gentlemen. If it doesn't, think about it. Go and look at the recording later on. I'm not sure when I'll be able to load it because I've got a financial accounting 2 class directly or 15 minutes after this class ends. By the way, just one other thing about the class, ladies and gentlemen. Um, I am aware that there's a 15-minute break between the first and the second period, but we'll just carry on if you don't mind, if there's no objections. We'll just carry on through that 15 minutes break, but then we'll end the class 15 minutes earlier, right? So you'll have a break after the class, you'll have a 15-minute break. I hope that's all right with all of you. It just works more smoothly that way. So now let's look at expenses, ladies and gents. Perhaps some of you who have had accounting at school can type for me again in the chat there. On which side, debit side or credit side, would expenses increase? In other words, you accumulate them. Thank you. Thank you, Matomi. Thank you, Nick. Thank you, Jolene. Yes, lots of you now answering on the debit side. So your expenses will increase on the debit side. So let us type that in for us. Expenses. Oh, now we're going to the next page. I will might just reformat it a little bit later. I'll probably take out some spaces there. So expenses increase on the debit side. Once again, like with income, it doesn't often happen that an expense will decrease because these are nominal accounts. You are basically accumulating your income on an account, and you are accumulating all your various expenses on the expense accounts. So there won't normally be a decrease in a expense account, but it is possible later on during the course of this year when we talk about accruals, when we look at our year-end adjustments. You'll see there's a topic called year-end adjustments. When we do our year-end adjustments, we'll see that in certain circumstances we need to decrease some of our expenses just because of the accrual concept that we've spoken about on Monday as well. Right, so what will happen if you have to decrease an expense? Expense will decrease on the credit side. Right, ladies and gentlemen, are you all happy with that so far? Now, I can obviously not say, I can save it on my local computer, but then it doesn't save on my OneDrive, unfortunately, and that then causes a conflict, and then eventually it just gives me a big headache. So I'll just save it when the power is back on. Are there any questions about the debit side, the credit side, on which side any element increases or any element decreases, or what is meant by a debit or a credit? Because now you have the opportunity. If there's anything that's not clear about it, you are welcome to ask. Maybe I should mention this. I forgot to mention this in previous classes. Normally, I say that right at the beginning of a year or of the first years in any case. There's no such a thing as a stupid question. There's only a stupid answer. Okay. So don't think that if you ask a question, somebody will think it's stupid. No, it means you are inquisitive. You want to make sure, right? And it's only if I provide a stupid answer that things go awry, that things go wrong, right? And also, what I always mention, if one student has a question, it means there are probably 10 or 20 other students who have that same question, but they're all too shy to ask. So someone must just be courageous and then ask if there's anything that you want to ask. Are there questions, or can we proceed with the accounting equation? No questions. Doesn't look like there are any questions. So you're all hopefully happy at this stage. Like I said, don't be shy. If there are questions, you are more than welcome to ask. Okay, so I'm just going to stop sharing this. I'm not going to close it because I have to still save it later on. Now, I just want us to go and look at a typical accounting equation worksheet. So I've just drawn up a blank accounting equation worksheet, if I can find it. There we go. I'm just waiting for it to appear on your side. So this is just a generic worksheet. It's got a lot of question marks, but I'll explain what it's all about. So this is really, this accounting equation worksheet is what we are going to use to understand and how to, or to analyze and understand how to record an entry and what effect it has on our accounting equation. Because once we understand that, then we can proceed to actually capturing the various entries, the transactions and events that took place. Then we can go and capture it in our books of account. We will use journals for that. We will post it over to our general ledger accounts, and eventually all of that information will end up in our financial statements. So yeah, as we've mentioned on Monday, there are two ways in which you can look at the accounting equation. You can say equity, like the definition in the conceptual framework. Equity equals assets plus liabilities. But because of the way that the statement of financial position is structured, we'd rather change that equation around, and we'll say assets equals equity plus liabilities in our worksheet. Why is that? Because when we draw up our statement of financial position, what they used to call the balance sheet in the old days, when we draw up that statement, it means we are going to indicate all our assets in one specific section of that statement. Yes, we are going to distinguish between non-current and current assets, but all our assets will be grouped together in one section. And in the other section, the second section, that will contain both our equity and our liabilities, because the equity plus the liabilities equals the assets. Now, let us maybe just look and analyze this. And after we've done this, we're going to use a practical example. In fact, I'm going to use a class test, a real class test from 2019 to illustrate it. And then you'll see, you'll actually be able to see what is expected of you in a typical test when it comes to the accounting equation as well as the conceptual framework. We'll just briefly go through that as well, but we are focusing mostly on the accounting equation. So in this generic worksheet, ladies and gents, what do we have here? These question marks there, that will represent the names of our accounts, right? So we might, in this case, have 4, 3, or 4, or how many in the sheet that I've just designed here. Well, I basically copied it from that test that we are going to be working through. There were 4 asset accounts, right? But there can be 3, there can be 10, there can be there's no limit. The sky's the limit, as they say, right? So those blocks are reserved for the names of the ledger accounts, right? What kind of an asset is it? Here, under the equity, ladies and gentlemen, we've got the amount and we've got the account name, because when it comes to the equity accounts, it will either be an income or an expense. So we'll have to indicate what kind of income account we are using or what kind of expense account are we using. And here we've got the liabilities. So again, those question marks will represent the names of our liability accounts. So in this test, there were 2 kinds of liabilities, but there can be an unlimited number of liabilities, right? That is simply the total balance. The total balance, maybe I'll come back to that. These are the opening balances on those asset accounts. So let's say, for instance, that asset account is bank. I'm just using an example. That asset account is bank. That will then represent the opening balance at the beginning of the year, or if we are doing monthly financial statements, at the beginning of the month. Very often these tests or these little exercises will just give you the transactions for a specific month. So that will be the opening balance on that bank account at the beginning of the month. Let's say our second kind of asset here is accounts receivable, just for argument's sake. Then that amount there, the opening balance, or that amount there will represent the opening balance at the beginning of the month for your accounts receivable account. Let's say this is your motor vehicles account. This is now a non-current asset called motor vehicles. Then there you'll have an amount, and that amount will represent the opening balance at the beginning of the month of that account called motor vehicles, right? And that one there, where we've got those question marks there, that will simply be the total of all your opening balances. So that is just the total opening balance of all your assets combined, right? The same year, that will be the opening balance of your total equity combined, uh, and that will equal that. And in the case of the liabilities, let's say this is your creditors or your trade accounts payable. That will be the opening balance at the beginning of the year. Let's say this is a long-term loan. That will be the opening balance at the beginning of the year or of the month, depending on whether we are doing financial statements for a year or for a month. And then all the balances, if you add them up, your total liabilities, that is where that balance will appear, right? So that is where we start analyzing uh, the effect that a transaction has on our accounting equation. Then all these lines in the middle, ladies and gentlemen, that represents where we are going to go and indicate or record the various transactions. So clearly, in a practical example, or in a test situation, or when you're out there in practice, you are practicing as an accountant. Well, by that time you'll be over the over the accounting equation. You'll just do it in ledgers. But the accounting equation worksheet prepares you to understand the ledgers and to understand the journals and to understand what effect each transaction has on your assets or your equity or your liabilities, and ultimately on your financial statements as a whole. Okay, so here we will see if your assets increase, will indicate it here as a positive. If your assets decrease, will indicate it here as a minus. If your liabilities increase on your credit side here, we'll show it as a positive figure. If your liabilities decrease because we are repaying it or we've paid a creditor, then we are going to show it as a minus, as a negative figure. And then right at the end, we've got our totals, ladies and gentlemen. So after we've taken into account the opening balance, and we've taken into account the effect that any entries or all entries have had on that specific account, that will be our closing balance on that account. Let's say it's accounts receivable or bank. I think we mentioned bank first of all. Bank at the end of that month or at the end of that year. If that's your accounts receivable balance, ladies and gentlemen, so we'll start with our opening balance at the beginning of the month or the year. We'll see what effect, with all these transactions, what effect did those transactions have on our balance? So that will then represent our closing balance at the end of that month or at the end of that year. The same with this asset, right? So it starts with an opening balance. We see what effect the various transactions had on that balance, and we arrive at our closing balance. And this final total here will just be the sum, the aggregate, as they say in financial accounting, the sum or aggregate, the total, in other words, of all your closing balances for your assets. So that will appear there. Same with the equity, we'll see what effect all those entries, all those transactions that took place during the course of this period, whether the period being a year or a month, what the effect was, and we'll find the closing balance on our equity accounts at the end of that specific period, and that will then equal the total equity. Same with the liabilities, ladies and gentlemen. I think you get the drift now, but I'll just mention it again. So we are going to take into account our opening balance on each liability account. We're going to see all those transactions that we've recorded here. What effect did those transactions have on that specific balance? And then taking all of that into account, we arrive at a closing balance at the end of that specific period. We do the same with all our other liability accounts, ladies and gentlemen, and ultimately we will get a total of all our liabilities here. And then by magic, ladies and gentlemen, this is where we start hoping for the best. Then that figure there, that your closing balance is after taking all these transactions and opening balances into account, it means that figure there must equal the sum of that figure plus that figure. So right at the beginning of the period, your accounting equation must be in balance. It must work out. And after you've recorded all your transactions and you've taken it into account the effect that it had on the accounting equation, at the end of the day, at the end of that period, then the same must be true. Your accounting equation must still add up, right? So your assets must still equal the total of your equity plus the liabilities. Okay, I've been talking a lot there. Now it's time for you to talk, ladies and gents. Uh, is everything clear about that? Obviously, we are now going to look at a practical example. Like I said, we are going to use the very last class test that was written on paper, which was March 2019, as our basis. And then we'll work through the transactions. And then I want you to be very actively involved in all those transactions. So let's pause there. Any questions on this accounting equation worksheet? You are welcome to ask. No questions? Then I'm very happy. I would have been happy if you asked questions as well. Don't get me wrong. I'm happy either way. But if there are no questions, then it looks like everything is clear so far. Okay. So now let's go and take that test from 2017 and we put all of this into action. And I want you to participate, ladies and gentlemen, with each transaction that we are going to be doing. I'm just going to briefly go through the first part of that test, which is just the theory part about the conceptual framework, so that you can know what to expect in a test on that. And then we're going to look at the transactions. So I'm just going to open another document. If you can just give me a few seconds there. At least that one I didn't change, so I don't need to save it. Just waiting for it to appear on your side. There we go. Okay. So this is Financial Accounting 1, class test 1, week ending the 6th of March 2020. Sorry, not 2019, obviously. The lockdown only happened at the end of March 2020. So we still had this test, the 2020 March class test on paper. Okay. So, ladies and gents, let's just briefly go through what you can expect typically in a test. Now, the first question really is all about the conceptual framework, the definitions, the definition criteria, as they call it, the recognition criteria, and so on. Right. So, let us just briefly go through it. So, here, very straight and forward. What are the definition criteria of an asset? Now you know that it's a present economic resource controlled by the entity resulting from past events. So that's almost like a little recitation or a rhyme that you know by or should know by now. Well, the different classes, as you can see, this was a version A. Where is it? Test A. But there's also a test B, a test C, and so forth. So we're just going to look at one of them. Maybe next time, maybe next week, we look at another one. We'll see. Okay. So the test B will have different questions. So for instance, in test A, and I must also mention when it comes to the online tests, ladies and gentlemen, different students will be receiving different questions, right? So when you are doing an online test, Not all the students are going to get this question. Some students will get what are the definition criteria of an asset. Other students will get the test B, which then requires what is the definition criteria, let's say, of a liability, for instance, right? Uh, I'm just mentioning that as an example. The next question for this A version, what is the definition criteria of an income? The B version probably had what are the definition criteria of an expense, for example. And now we know it's an increase in assets in the case of an income or a decrease in liabilities, which then results in an increase in your equity, but that increase is not as a result of contributions from your owners or the owners of that business. Then they ask what is meant by a present obligation in this A version. I guess in the B version, it would have asked what is meant by economic resource, for instance, right? So it'll be different questions. And we know what is meant by present obligation. It is a duty that the entity has, and that entity has no practical ability to avoid. And then what are the two fundamental qualitative characteristics? Because that also determines the recognition criteria for us. And we know that is relevance and faithful representation. Okay, so there you get an idea of what to expect from typical questions from the conceptual framework. They could also have asked you to explain in your own words what is meant by, let's say, what is meant by the accrual basis of accounting, or they could have asked you provide us with 2 or 3 methods of measurement. So there, those things that we've discussed recently. Okay. Now let's go to question 2. This is the one that we are really want to look at. How many transactions do we have? Looks like 9. We've got 9 transactions, ladies and gents, and we want to go through all of them. Uh, Hopefully today, if we're not able to go through all of them today, then we'll carry on next week. But let's see if we can. So question 2 reads as follows. Miss Wong Kong is the owner of Take Two, a cigar bar and lounge in the waterfront. She has approached you for assistance to record the transactions below. And then they give you some instructions here. They say the opening balances for the year have been provided on the attached table. That attached table being our accounting equation worksheet. So there we can see, ladies and gentlemen, we can see for ourselves. They've given us the various kinds of asset, the account names. So that one account is our vehicles at cost account. The other one is our equipment at cost account. The other one is trade receivables or debtors. And the other one is bank. There are the various opening balances. So that has already been provided for you on the sheet, and that is the total of your assets. Here in the case of the equity, they've given you the opening balance already. And in the case of the liabilities, they've provided you with the name of the accounts. So the 2 accounts there is Capitec loan. So they've got a long-term loan probably from Capitec loan, and then their creditors or their trade payables, if you wish, right? So you can either use the term creditors or trade payables. In this case, either trade receivables or debtors. Doesn't matter. Uh, we'll see later on when we get to the financial statements, whether you call it debtors or whatever, when you disclose it on the face of your statement of financial position, you're going to disclose it as trade and other receivables, if there are other receivables, which we'll talk about in the future. In the case of your creditors, doesn't matter what you call it, if you call it creditors or creditors control or trade payables, whatever, when you disclose it on the face of your statement of financial position under your current liabilities, you will disclose it as trade and other payables, if there are other payables, which we'll get to later on during the course of the year. Anyway, there we've got the opening balances as well. So they've already provided the names of the accounts on this accounting equation worksheet, and they've provided us with the opening balances, right? That is what they're saying there. Then further instructions for the year. So this is now for a year. For the year ended 31st of December 2019, analyze the transactions below on the table. And that table again refers to our accounting equation worksheet. Clearly indicate the effect on the accounting equation in the relevant columns. Well, we've already discussed that when we looked at the blank sheet. If it has no effect, indicate it with a dash. In other words, a little stripe. Okay, indicated with a dash if it has no effect. Sometimes even those dashes might count for marks, so that we as lecturers and we as moderators, we can see that you understand that that transaction did not have an effect on that particular item, right? So that is also important. All negative amounts or decreases must be indicated in brackets. Now, let us get this straight from the start, ladies and gentlemen. When it comes to financial accounting, your positives and your negatives will always be important. Even later on in financial accounting 2 and 3 and 4, you'll see when we draw up our financial statements, if something should be shown in brackets and you do not show it in brackets, then you're not going to get the mark right. So if an amount is negative, it has to be shown in brackets. Please bear that in mind. So all negative amounts which represent decreases must be indicated in brackets. Where there's an increase or decrease in equity, this is now the further important step. Where there is either an increase or a decrease in equity, indicate the name of the account that will be affected, either debited or credited. Obviously, if it's income, it's going to be credited. If it's an expense, it's going to be debited. So we've got to indicate the name of the account. So we'll have to come up with some account names during the course of this process. It's actually not rocket science. Don't worry. It's actually very logical. And then also, obviously, what effect it had. So we have to put the amount in as well. If it's positive, we indicate it as positive. If it's negative, we indicate it as negative. So now, this is fun, isn't it, ladies and gents? This is fun. This is almost like playing a game. Really, for me, doing a little question like this is really like very similar to playing a game or doing a crossword puzzle or something like that. So I hope you enjoy it. Right. But now I want you to participate. Are you ready to type? Are you awake and are your fingers loose and all those kinds of things? Are you ready? Steady? Let's go. Let me just go to that sheet again. So our first transaction, ladies and gentlemen, is Miss Kong increased her equity in the business to 100,000 rands with cash. Mrs. Kong increased her equity in the business to 100,000 rands with cash. Okay, now let's ask the questions. I'll have to navigate now between collaborate and my sheet. Which accounts will be affected? Let's just look at the elements first, ladies and gents. Let's just look at the elements and then we can look at the specific accounts. I want us to do this again from the A's and eventually we'll end up with a Z. Which elements will be affected? Let's look at the amount, the cash. Let me just read that again. Increased in the balance with cash, 100,000 rands cash. So which elements will be affected? Assets, liabilities, or equity, or which combination of those? If we can just type the elements that are going to be affected first, and then we'll talk about whether it increases or decreases. Assets, definitely assets will be affected. While we are talking about the assets and equity. Thank you, Jardine. Thank you all. Right. So assets and equity. So you are spot on, ladies and gentlemen. This does not affect your liabilities because you haven't taken out a loan, you haven't repaid a loan. It doesn't affect your your liabilities whatsoever. But the two elements that will be affected will be assets and equity. Now let's go a little step further, ladies and gentlemen. Which asset will be affected? Now let's give it a name. We've had a look at those account names. Which asset will be affected? Bank. Bank. Thank you, Matome. Thank you, Bonsley. There we go. Okay, so you've got a bank will be affected. While we are talking about the asset, bank being affected, will that increase or decrease the bank balance? Increase, increase. There we go. It spot on, spot on. Brilliant. Thank you, students. More money is now in the business's bank account, so that bank account will increase. So we already know that in that column that we have for our bank account, there will have to be a positive. Now, we've already mentioned, ladies and gentlemen, that the other element that is going to be affected is your equity. Which equity account? Let's give it a name. I know that the name does not appear on the sheet yet, but we'll have to give that account a name. Remember, in that last instruction, they said we must go and indicate which account we are going to debit or credit. So which account will be affected with this transaction? Remember, it's Miss Kong, the owner. She put money in the business. The word owner should give you the key here. This is now a contribution from an equity participant. You remember when we looked at the definition of an income, this is, in other words, not an income, because that income definition excludes owner's equity. That definition of an income excludes contributions from your equity owners of equity claims. Right. Exactly, your owner's equity or your owner's capital, whichever way you want to call it, owner's equity or owner's capital. All right, ladies and gents, last question about this little entry before we look at the entry. Will your owner's equity increase or decrease through this transaction? We've got a difference of opinion. We've got a difference of opinion. Let's look at it from, we can look at it from two perspectives. Two perspectives. First of all, if we look at it from the perspective of purely the accounting equation, if your assets increase and your liabilities stay the same, what has to happen with equity? It has to increase. Otherwise, your accounting equation doesn't work out. So that tells you already that it has to increase just by looking at the accounting equation as on its own. But you can always also look at this logically from a logical perspective. Does does the owner now have more interest in the business once the owner put in more money, or does the owner have less interest in the business? The owner has more, more interest in the business. The owner put more of her own money into the business. So obviously the equity is now increasing. So those who wrote increase there, spot on, full marks. Right. So now let us go and look at that entry, ladies and gentlemen. We'll now go and confirm whether we are indeed correct or not. That's what's so fun about this game. Where's our first entry? Right. Now, remember, now this is also important. I wanted to point this out, ladies and gentlemen. I wanted to point this out. This is important, this little word here, that word, to. That word is also important to us. What could have been the alternative? There's a big difference, and you're going to encounter this as a kind of a trick question in many topics, even when we get to property, plant, and equipment, and when we get to share capital and many topics that lay ahead of us in the next few years. You must always look out. Are they saying increased to, in property, plant and equipment, there's something we call the revaluation. There also they mention either to or by or with. If they said Mrs. Kong increased her equity in the business with 100,000 rands, by how much would it have increased then? It would have increased by 100,000 rands. If she increased it with or by, they can use the word with or by 100,000 rands, it means she put in 100,000 rands. But now, this is the little trick here. They say Miss Kong increased her equity in the business to 100,000, right? Not with 100,000, not by 100,000, but to 100,000. What does that mean? It means once she has made the deposit, once she has put in money in the business's bank account, her equity now stands at what? You can type in the chat for me. Now her equity stands at what? At what balance? Absolutely. There we go. Thank you, Nalindi. Thank you, Zubaida. There we go. Now it should stand at 100,000 because she increased her equity to 100,000, not by 100,000, not with 100,000. Sorry that I'm making such a song and dance of this, but I have to warn you that you'll find very often in financial accounting, other topics as well, right, ladies and gentlemen? So what is the difference? What is the difference? At the moment, the opening balance on the owner's equity account was 85,000 rands, right? She's increasing it to 100,000. So how much did she actually deposit into the bank account? The difference between 100,000, which is the where she's increasing it to, and what it was before that, 85,000. The difference is 15,000 rands. That is what that increase will be as a result of that transaction. Okay, you've already all correctly identified this. Bank will increase by 15,000, so that's a positive. It will not affect any of the other accounts. So we've put in dashes there, we've put in dashes there, and then we've also got to name the account, ladies and gentlemen. I don't want to type in anything now because then my system will again shows me it can't save my my sheet to my OneDrive. But you could also have called that owner's capital. You could have called that owner's equity, right? When it comes to the names of our ledger accounts, we actually have quite a free hand because we are accountants, or we are becoming accountants, we are studying towards becoming accountants. It's only when we disclose the information, in our financial statements, that we have to use very certain terms, right? So there we will use, let's say, owner's equity. But here you could have called it capital, owner's capital, or owner's equity, right? Right, ladies and gentlemen, so far so good, but maybe let's just pause for a second or two there. Are there any questions from your side about that first transaction? Is it clear as daylight or is it clear as mud? Matomi, I'm a little confused. If it was with, we take it as it is. Yes, if they had said in that specific transaction, that transaction number 1, if they had said she is increasing it with 100,000, or they might have said increasing it by 100,000 rands, then you would have indicated 100,000 because that would then mean that it is the amount that she put in, right? So that 15,000 would then have been 100,000, right? I hope that makes sense. So if they said she's increasing it by or with 100,000, then the increase there would have been 100,000, and the increase there would have been 100,000. But here they said she's increasing equity to, in other words, the end balance the goal, the objective is to have 100,000 equity in the business. Does that make sense? I mean, does that help? To me, does it? Okay, good. I'm glad you're asking, ladies and gents. If anything is not clear, please do. Let's now go to our second transaction. I don't think we'll be able to finish this today, but let's see how far we get. If we don't finish it today, then we'll carry on with it next week, Wednesday, because on Monday, obviously, we've got a joint online class with all the class groups. So then I'm going to start a new question. Second one. Take two. Okay, we know what is take two. This is our business. This is Miss Wong Kong's business, right? Miss Wong Kong, her business name is Take Two. So they are saying Take Two provided facilities. And what is their business? They have got a cigar bar and a lounge in the waterfront. So they provide facilities for parties and for people coming in to have a nice smoke. um, Even though smoking is not very what do they call it, a good thing to do nowadays apparently, but anyway, that is a different matter. So Take Two provided facilities at a charge of 16,000 rands for a birthday party to Donna Grace, right? So what does that mean? Let's just analyze that first sentence. Take Two provides facilities at a charge of 16,000 rands for a birthday party to Donna Grace. What that means, ladies and gentlemen, look, this business is basically a service business. Even though they might sell cigars on the side as well, they might sell some drinks on the side as well. But their primary objective is really to provide a service. They provide the facilities, right? So what they are saying there, this might include some cigars, this might include some drinks, it probably does, but the fact remains they are charging Donna Grace being the customer, right? Donna Grace is the customer. They are charging Donna Grace 16,000 rands to host her birthday party or a daughter's birthday party or whatever. They are charging her 16,000 rands. Let me just pause there. Let me ask you, is that clear what it means? Yes or no? Donna Grace is the customer. Take Two is our business or the business that we are doing the books for. Yes. Thank you. Okay. So you're all happy there. So yes, thank you so much. Thank you all. So we are charging, our business, Take Two, is charging our customer, Donna Grace, 16,000 for hosting that party on our premises. Now, what they also say, ladies and gents, the second sentence of that same transaction is that 2,000 rands was received in cash and the balance was agreed to be paid later. Okay, so 2,000 rands was received in cash and the balance was agreed to be paid later. Now, ladies and gentlemen, I'm going to ask you a few questions. Some of them might be tricky, some of them might not be so tricky. Let's see. But the whole point of this is that you must understand the transaction, all of you. No student left behind, each and every one, okay? Each and everyone must understand it so that we know how to go and indicate this on our accounting equation worksheet. Let's start with the elements again, ladies and gentlemen. Which elements will be affected? There are again two elements that will be affected. Sometimes you may find only one, sometimes you may find two, sometimes three, but there are two elements being affected in this transaction. Can you type for us the two elements, please? Assets and liabilities. That's a nice try. Let's see. Assets, right? So assets will be affected. I agree. Assets, so you're all correct. Assets will be affected. Will liabilities be affected? Do we now, as a business, do we owe anybody any money? We as a business, do we owe money? Yes or no? Just a yes or no question. Do we owe money now? No. We don't owe money to anyone because of this transaction. Have we repaid money to someone because of this transactions? No. Thank you, Mr. Zwilly. There we go. There's the complete one. Also, Logan, thank you. So what will be affected, ladies and gentlemen, will be your assets and not your liabilities, because you don't suddenly now owe more money to anyone. You haven't repaid anyone during the course of this transaction, but equity will be affected because you're charging them a fee. So you have derived income. That's the point here, right? You are deriving income. And what does income do? It increases your assets or it decreases your assets. Remember that little rhyme that we had on Monday that we briefly looked at 10 or 15 minutes ago again. Right. So, like you say there, it'll affect your assets and your equity. Now, let's get to the assets, ladies and gentlemen. How many types of assets? You can just type for me a number. How many types of assets will be affected? Two. Mahomet says two. Tommy, sorry, my laptop is on battery saver, so I can hardly see. It's very, very faded. It's not as bright as usual. Lolita as well. Everybody says two. Great, great. You are correct. You've got that prize. It is indeed two assets that will be affected. Which two assets? Now type them. Identify them for me, ladies and gentlemen. Which two assets will be affected? If we look at those account names, bank will be affected. Yes, that's one. Bank is certainly correct. That confirms it. Thank you, Mr. Zweli. You are, like we joked on Monday, you are gaining a lot of friends today. Trade and other receivables. Thank you. Thank you, Nalindi. Thank you, Matome. Yeah, you're correct. Right. So the other asset will be your debtors or your trade and other receivables. Quite correct and well indicated there as well, Nalindi. Okay. So those are the two assets that will be affected. Now, my next question. By how much will the bank, that asset called bank, by how much will that be affected? 2,000 rands. Thank you, Levante. Thank you, Sabaida. Yeah, thank you, everyone. Logan, there we go. Lindy, thank you. Buy 2,000 rands. Why? Because that customer, Donna, what was her name? Donna Grace, she paid us 2,000 rands in cash. We were going to pay it into our bank account, or deposit it into our bank account, or she might have done an electronic funds transfer for 2,000 rands directly into our bank account. So clearly, our bank account will increase by 2,000 rands. Right. Second question in this particular contest. Your accounts receivable or debtors or trade and other receivables, whatever you call your debtors account or debtors control, by how much will that increase? Thank you, Daniel. Thank you, Matomi. There we go. By 14,000. In other words, the difference between the income that we've generated, which was 16,000, and the 2,000 rands that they've paid already on that account means they owe us a further 14,000 rands. Thank you all, Matomi there. Uh, Tandeka, Tandeka. Sorry, like I said, my screen is very low power because it's on battery saver. Uh, so they owe us 14,000. So that means we are accruing that service that we've rendered. We are accruing it, a certain portion of it, right? The 2,000 we've received, so that is done and dusted. It has been realized, but the 14,000 they still owe us. So we've got to accrue that on our accounts receivable account. Last question in this respect or in this context, ladies and gentlemen, just one more. Obviously, our equity is going to increase by 16,000 rands. We've already mentioned that. That is an income. What kind of income? What are we going to call that income? One can be fairly creative here. Let us go and see. I would just call it services rendered, but let's see. Okay, they've also called it services rendered. Right. So there we go, ladies and gentlemen. There if we see, let me just see what you typed there. Service rendered, service delivered. Okay, thank you, Mr. Zweli. That's another possibility. Service delivered, right? So, like I say, it's only when it comes to disclosing it in your financial statements that the IFRS's, the various standards become very descriptive. When it comes to your own set of books, your own ledger account names, you've got basically a free hand as long as you understand what you mean, and as long as if you retire or if you go away, a new accountant will also understand what you mean. So it could have been services delivered, service delivered, services rendered. The reason why we call that services rendered, let me just return uh, to the sheet, is there's a IFRS, I think it's IFRS number 17, or it might be 8, I'm not sure, which deals with revenue, and there they specifically mention the term services rendered. So are we correct? Yes, ladies and gentlemen, this transaction did not involve vehicles, it didn't involve equipment, didn't involve, uh, uh, um, there should have been dashes there. I'm sorry, forgot to put that in. It didn't affect our capital loan or our creditors, but it did affect. It increased our trade receivables by 14,000, as you've correctly indicated in the chat there. It increases our asset bank by 2,000. It increases our equity by 16,000 rands. Which kind of equity in this case? It was not a transaction with our owner, so it's not capital. This was a transaction with a third outside party. So clearly, this will qualify in terms of that definition as income. We've got to give the accountant name, services rendered or service delivered, uh, as you mentioned there. Okay, so far so good. Let me just pause there for a second. Any questions? Are there any students who do not understand that transaction? Doesn't look like it. If there's no answers, then I will accept that it's a no, then there's no one who does not understand it. That's a double negative, but I guess you know what I mean. Okay, so now let us go to the third transaction. They say Miss Kong will be expanding the business. So she wants to grow the business. She might want to buy a bigger amount of, or a bigger variety of cigars, or a bigger variety of drinks, or she might want to put in more chairs or more seating, a few nice leather couches that are very comfortable. So Miss Kong will be expanding the business and excuse me, and took out an additional interest-bearing loan of 20,000 rands with Capitec Bank. Right. So she wants to increase the capacity for this business, either by increasing the inventory or perhaps the infrastructure. The fact remains she's taking out a loan from Capitec Bank. So, ladies and gentlemen, let's go through our same process that we had with the previous two transactions. If you can, first of all, type for me which two elements will be affected. Which two elements will be affected? Assets and liabilities. Thank you, Matomi. Exactly, assets and liabilities. Thank you, Relindi. Liabilities as well as assets. There we go, ladies and gentlemen. Now let's go and go a little bit further. Which particular asset will be affected? If you can identify for us the asset, which asset will be affected? Bank. Thank you. Well, there. Matomi has got for us both the asset and the liability. It will be the asset bank and the liability Capitec loan. Right. Thank you. Thank you all for those answers. You are spot on. What does it mean by interest bearing? Chegu, sorry, Shumbuza. Sorry, but like I say, my screen is very faint. I can hardly read. What does it mean by interest bearing? It means that loan, banks are all also businesses, right? So they've got to make money. So if they are going to lend you, what was that amount? 20,000 rands, right? They are going to say, right, I'm giving you 20,000 rands. You can repay me over, let's say, a year or 2 years or whatever the duration of the loan is, the term of the loan is. But in total, you have to pay me back not 20,000 rands, you have to pay me back 22,000 rands, right? And that difference, that additional amount is their income. So they are charging you interest on the loan. Just like if you've got a savings account at a bank, they are using your money, right? So they are basically borrowing the money from you. It's your money that's in the bank. They give you interest, don't they? I hope so. If they don't, you better approach them. So they give you interest because they are making use of your money. That is how you get a little income from your money in the bank, right? The opposite also applies there, Shikumbuzo. The opposite applies if they are going to lend you money, you borrow money from them, they are going to charge you interest. That is their income. Does that help, or should I talk more about it? Perfect, perfect. Okay. So an interest-bearing loan basically means they are going to charge you interest. It means you are eventually, when you've repaid that loan, you would have repaid more than just the 20,000 rands capital. You would also have paid an additional amount with each installment that is partly capital and partly interest. So it's an expense for you, the interest, and it's an income for the bank. Okay, where were we? And obviously that will be okay. That's the next question. Will it increase or decrease your bank? Increase or decrease? Increase. There we go. It will increase your bank. They've given you the money, they've transferred it into your bank account. So your bank account will increase by 20,000 rands. Right. Then the loan to Capitec, will that increase or decrease? Again, you can look at this from a logical perspective or from an accounting equation perspective. Again, it will have to increase, right? We now owe them more. So the loan outstanding balance is more than what it used to be, right? So it has to increase. Also, if that's the logical way, that's the logical way. Or if you look at it from the accounting equation perspective, if your assets have increased, your equity has remained the same, it means your liabilities will have to increase. And that will then also increase by 20,000 rands. Okay, ladies and gents, let's go and have a look whether we are not going the wrong way here, that we've actually done it correctly. Let's look at that transaction. Where is it there? Okay, we've seen that it doesn't affect any asset other than our bank account. It increased our bank account by 20,000 rands. It did not affect our equity. There was no income. There was no expense. There was no transaction with our equity participant. In other words, the owner, Ms. Kong. But our loan increased by 20,000. So again, that is a positive of 20,000. Right, ladies and gents, the next one is going to take us quite a few minutes to discuss transaction four. It'll probably take us 10 or more minutes, and we're at 14 minutes past 11. I promised you that we will finish 15 minutes early because of the 15 minutes break that you've lost. So we still got in our full hour and a half. I'm thankful that my phone's battery is still working and my laptop's battery is still working. I've still got to start my financial accounting 2 class on mobile data as well, so I better switch everything off now for 15 minutes or so. Thank you very much. Let me just check whether before we actually finish off, before we Tyler, are there any questions from your side about those anything that we've discussed today, whether it be those three transactions, general ledger accounts, debits, credits? Are you happy? If you are, then give me a happy face. If you're not happy, give me a question. Any questions? Right, ladies and gents, look, sir, should we buy the ninth edition textbook or the 8th edition? Happy faces. Thank you, Matome. I appreciate that. If you, thank you, Luigi. Thank you, Jade. Okay. If the ninth edition is available, then rather buy the ninth edition, right? I didn't receive my edition yet, so I wasn't sure whether the ninth edition is available. But Utah did indicate that the ninth edition will become available before the end of February, and that was yesterday. So if you can get a hold of the ninth edition, that will be better. But you can also use the eighth edition if you want. You can even use the seventh edition, but like we said, then you must just not use the seven editions, chapter 8. Is it available at takealot.com? Okay, thank you, Logan. Now I know as well. I'm supposed to be getting one directly from Utah. Maybe that's who phoned me earlier today, but I couldn't answer. I was busy preparing for the class. I'll phone them back later. Thank you, Tolly. Thank you. Happy, very happy. Just like Luigi and Matomi. Thank you, students. I appreciate you attending. I've like you know, I've got another class in 15 minutes or so. So I'll only load the link to this recording sometime later this afternoon, but it will be there before the end of the day. Have a lovely day. Thanks for attending. Keep well. Bye bye.